Bitcoin replaces that base layer of money, but it's in every central bank. It's at the base layer of all fiat on top of it. That's a good asset. And that asset is more and more valuable because we don't price it in Bitcoin. We price it in fiat.
Welcome back to Library of Wealth. Today we have Mark Yusko discussing a major turn of events coming to Bitcoin and how the crypto market will be turned upside down in the last few months of the year. Yusko predicts that Bitcoin's market cap will reach $6 trillion, which will bring the price to $300,000 per coin. He also believes that Bitcoin's value will continue to rise exponentially after the halving event of 2024, and gives his timeline and price prediction of when Bitcoin will reach $1 million. Yusko also stresses the importance of Bitcoin as a hedge against inflation and draws attention to how governments' monetary policies have led to the devaluation of fiat currencies over time, impacting the purchasing power of money. In contrast, Bitcoin's limited supply makes it an attractive alternative investment for those seeking to preserve their wealth. Unlike traditional fiat currencies, Bitcoin operates on a decentralized blockchain, making it a unique and superior form of money. The fixed supply combined with a massive increase in demand is expected to lead to significant price appreciation, akin to what we've seen with gold. Let's get into the latest interview with Mark Yusko, where he shares his insights on the future price of Bitcoin and how cryptocurrency and the role of money will be completely transformed in the coming months. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
When there's just a commodity market, like the good old days of oil, I produce oil, you need oil to power your machines. If I want to sell you oil, Lark, I actually have to have the oil to deliver to you. I have to put it on a tanker truck and send it to you. Oh, no. The CBOE came along. I'm sorry, the COB, the BOT, Board of Trade, CBOT, Chicago Board of Trade came along and said, no, we have these cool things called futures contracts. So Mark, you just promise to get some oil to sell to Lark in the future. But if we settle up before the actual date, I never have to get the physical commodity. So there's no increased demand for the commodity. There's only an increase for paper. And so what happens is the paper goes up and the physical supply stays the same. Well, that's bad for price because there's more supply, so the price falls. And so we saw this with gold. The gold ETF would not be approved, would not be approved, would not be approved. And despite all the evidence that the economy was rocking and the baby boomers were buying stuff, gold was stuck at $400. This unlocks a $30 trillion market. $30 trillion of RIAs and brokerage firms that have been reticent to approve anything on their platform. An ETF, they're going to have to. So 30 trillion bucks. Let's get 1/10 of 1%, 30 billion. 30 billion on 600 billion, that's not much, Mark. That won't do anything. 600 billion, it ain't 600 billion. The free float is more like 100, 150. 30 on 150, that'll move the needle. And if we get 1% instead of 10 basis points, it's 300 billion. 300 billion on 150, that's a big ass number. Supply and demand is really simple. Microeconomics 101, really simple. When demand goes up and supply is fixed, and I will argue supply is actually inversely proportional to price, because people get more convinced that they want to hodl forever as the price rises, and they don't panic. So if the price goes back to 50 or 60, I think there'll be less free float, not more. I don't think there's a lot of people out there that are going to be selling. I think what you see with the daily selling is just the same people buying and selling over and over. It's the bots and the high frequency traders and Ken Griffin. Bitcoin's different. Bitcoin is better technology for money. And the base layer of money is a very, very valuable asset, right? The value of gold today is about closing in on 6 trillion. So that's a 10x from here for Bitcoin. But then Murray says, well, yeah, but that's just the base layer of money. All the other we have, the currency is bad. It needs to be replaced with good. And the reverse Gresham's law, good money will crowd out bad. Total global money supply is 86 trillion. That's a big, big number. Now look, I agree with him in theory, but in practice, the governments are going to fight really, really hard to maintain control of their honeypot. And our government officials, all 538 of them, love the fact that they can own parts of companies that they vote to give money to Ukraine that ends up at companies that they own, that manufacture stuff to go shoot off in this war. That's an awesome gig. They ain't giving that up. Governments aren't going to give that up. They're not going to give up their fiat. So I'm more like gold, dodo bird, Bitcoin replaces that base layer of money, but it's in every central bank. It's at the base layer of all fiat on top of it. That's a good asset. And that asset is more and more valuable because we don't price it in Bitcoin. We price it in fiat. Look, when I was growing up, I ask people this all the time, and you're too young, but I ask people, what was the lowest price you remember for a gallon of gas? Mine is 33 cents. I remember it like it was yesterday. Totem Lake in Kirkland, Washington, 33 cents, got my, learning to drive. And I put gas in my car the other day and it was, $4. It's the same gallon of gas. It didn't get better. It doesn't do anything. In fact, it's less good because there's ethanol in it now. So it's not quite as good, but let's take that off the table. It's the same gallon of gas. It's not that the gas got better, it's the money got worse. And so candy bar, right? A Twix was $0.25. Now it's like $2, or a Coke, $4.50. So that's not things getting better. That's the money getting worse. And so Bitcoin from 2020, Bitcoin's like $10,000, and they doubled the money supply in the United States. This is crazy. This is crazy stuff. 247 years as a republic, right? We're a republic, not a democracy. We're a republic. So 247 years, and 244 of those years, we created half the money. And then in 2 years, we created the second half. So what should have Bitcoin done? It should have doubled. Kind of did that. And now it's gone up a little more because the Fed bailed out SVB and all these other things and increased the money supply again. It was like, oh, they're tightening. They tightened interest rates, but look what they did with their balance sheet. It's going back up again. And so it's not a surprise that Bitcoin's up almost 100% this year because the money supply is increasing. And that's all the price of Bitcoin is. It's a reflection of the quality of the currency in which you denominate it. So if you denominate it in yen or euro or dollars or bolivars, they go down, it goes up.
In the past, commodities like oil were traded in a straightforward manner, where physical delivery was necessary. However, the advent of futures contracts changed the dynamics of the market. With futures contracts, traders could promise to deliver commodities in the future without physically possessing them. This led to an increase in paper demand, while the physical supply remained the same, resulting in price fluctuations in the market. Yusko explains that while speculators initially drive price movements, gamblers entering the market disrupt the cycle by pushing prices beyond fair value, resulting in crashes. He also points out that historical trends indicate a roughly 10x increase in value with each halving event, suggesting that the next one is scheduled to propel Bitcoin to $100,000. As technology evolves and the demand for decentralized and inflation-resistant assets grows, Bitcoin is positioned to play a significant role in reshaping the way people invest and use money. What do you think about the latest interview with Mark Yusko? And how do you think his Bitcoin prediction will impact the crypto market in the last part of 2023? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.